Hello, everyone. Welcome back to Crypto Cash. Thank you so much for joining me here today. This is your one-stop shop for cryptocurrency analysis, among many other things. I'm excited to check this one out here. We're looking at Civic, CVC, and this is a major request from my community members. And when I say major, I always try to make videos based on the largest amount of requests. Well, I've got double digits in the amount of requests that I don't normally get for this coin, specifically based on its 80% increase in under a 24-hour period. That is quite significant. And everyone's pretty much asking me, how to navigate this kind of climate. What are the support and resistance levels? We're going to check that out here today. Okay, so just know I'm not a financial advisor. This is for educational purposes only. You should always do your own research and make sure you take ownership of your own trades. I try to say that in every video because of the fact that it's important to, blame yourself if nothing else, right? There's nothing worse than pointing the finger. And I say that just in the sense that, a lot of people have trouble in cryptocurrency, and I provide my trades with all my community members. So, link in the description below, check that out. I have a Patreon account, and I have about an 80% success rate using every single method you're going to see here today, right? It's it's developed over 15 years, of course. It's taken some time to get here. It doesn't happen overnight, but if you want to kind of join in the fun, feel free to reference my community, of course. But if not, that's okay too. Again, reference that in your own time. Also, be sure to do this if nothing else. Join my Telegram community. Again, that link in the description is in the description below, and it's really cool. It's a good group of folks. Everyone gets in there, and we all learn as much as we can. And it's definitely growing over here in the last I think I've had it for 3 months, and we're only almost about 900 members. So pretty cool stuff there. All right. Anyways, enough rambling. Sorry, I do that sometimes. Let's just go ahead and get to the charts. Let's check it out. All right, folks, let's go ahead and take a look here at Civic. And just before we do, we always look at Bitcoin, Ethereum first to get a baseline on the market, because if we don't know what Bitcoin's doing, it's really hard to understand how these altcoins are performing. A lot of times there is, again, fundamentals, catalysts that we don't quite see on the charts, but generally speaking, the charts still speak to us in a lot of different ways. But what I want to get at here is that Bitcoin and Ethereum are two of the largest coins in the industry, of course. It's important to know what's going on the ERC20 blockchain and obviously Bitcoin. So that's why we're going to look at that first, okay? And just to preface, I use TradingView.com desktop application. I get that question a lot. And I recommend the paid versions. There's a link in the description below for that if you're interested in essentially checking it out for a free month, see if you like it, because you do need more than 2 indicators present at any given time. It's really important to have that, of course, and you'll see here in just a moment what I'm referring to. So first of all, we've got Bitcoin here, and this is essentially the 4-hour chart. I use the 4-hour chart because it's the most effective way of kind of getting a big picture. Obviously, the 1-day chart is important too, but the 4-hour, I think, speaks to you a little bit better in the sense of being able to see some, more lower time frame, resistance and support levels. So we'll look at that here in just a second. To preface, so I do have my simple moving averages enabled, and the 50 is working as a potential support level here. It hasn't been tested yet since it broke as a support, but that is essentially where the price is at. It's hovering around 48,700. We've got the 200 trailing behind at about 46,000. So generally speaking, we're looking to be in pretty good shape here for Bitcoin. However, it's still struggling to exceed 50,000, the resistance level. Okay, and what I mean by that is, again, the 1-day chart is the most important indicator to look at when it comes to support and resistance levels. And in that, if you can see here so far, 50,000 has been tested 3 times now. Today is testing as well. Now, will it close above that? It's hard to say, but generally speaking, what you're looking at is when the price is considered, when it's below and the 1-day chart closes below, it's still considered resistance. So therefore, even though this candlestick here is about 3 hours left until it closes, we're still considered to be 50,000 as a resistance level. It is not a support level yet. Also, bear in mind, too, the weekends are less volatile. There's a lot less volume, and in turn, that can be hard to estimate as well. So there's a strong chance that this could still be considered resistance, even if it closes as is right now. Okay, so just keep that in mind as well. All right, so that's kind of what we're looking at there. Another thing to note, too, here is that we have a support level at approximately 46,800. So 46.8 is the next major support level outside of 50,000, which, again, is still a potential resistance, right? It's testing it, figuring it out, not quite there yet. Excuse me. So we're looking at Ethereum here next. Now, Ethereum is a good one here, of course, in the sense that it really took off recently. We all know that. We can see that. And it is trailing off here, of course, because Bitcoin kind of went sub 50,000 recently, and it's kind of trying to figure its price action out so far. But keep in mind, it's got a major resistance at about 41.50 and a major support at about 35.50. Now, I got the question, why is that a major support level, 35.50? It's because of the past here. If you look, you see a major resistance level was established quite a few times, and it also was touched there as well. So when you kind of add that up, there's like 7 or 8 times where it tested and was rejected. Now, that being said, now that it finally broke that resistance, it's considered a support. So that's the reason for that. The 50-day simple moving average and the 200 are trailing behind, and all in all, Ethereum's in really good shape, even though, yes, it is trailing down a little bit. It had to have done that because, look, it tested right around 4,000. It hit 4,000 yesterday at one point. So, Ethereum's definitely on fire. But if you want to say on fire, Civic is obviously on fire. That's the main reason I want to cover this too. I got a lot of requests for this, of course, from my community members. And why I like to cover stuff like this is just based on the fact that it's important to exercise caution when price jumps up like this. Obviously, there's case in point where it could continue, but we want to look at previous resistance levels to kind of see what's going on. Okay, so as we can kind of see the price right now, where it's at, it is testing and rejecting at a specific place. So first of all, it rejected right here at a previous resistance of about 70 cents, even though the all-time high as far as a close is about 72 cents as a rough estimate. So 72 and 70 cents are the two major resistance levels. I'm going to mark them both just because, if we were to break 70 cents, we need to make sure that 72 is also a potential option. Okay, so just something to think about there, because again, you can kind of see here in the big picture exactly what it's looking at there. And you can tell that 70 and 72 cents are basically really big support levels or potential support levels. They're resistance levels right now. All right, so that's kind of what we're looking at there. So just kind of baseline, that's where we're at there. Major support level back here at 38 cents. We'll try to find some other support and resistance levels in the meantime. We need to look at smaller time frames for that. But based on the one-day chart alone, 70 and 72 cents are some pretty big resistance levels there. So if it continues back up and over the next few days continues to test and reject, we'll know why. It should kind of stunt itself right around this range here. All right, so let's take a look at the RSI. Excuse me. We're looking at right over 70. So we're at about 85 for the RSI, which is kind of standard based on the fact that we had just such a strong increase here today. And we had a MACD convergence, of course, yesterday. So that's part of the reason why it probably took off as well. A lot of times people will buy into the MACD convergence, and that is a big catalyst in a lot of ways. But I'm venturing to guess there are some fundamentals here that I'm not aware of, that I can't see, that drove the price up like it did, right? Typically, when you see this kind of increase, it happens like that, or it's something that's kind of pushing it on the background. Now, another thing to note too is that when the price comes up this high, traditionally it comes down about 50%, right? So the fact that it hasn't come down 50% yet, and we are only 3 hours away from this actually closing, we're in really good shape here. In other words, the likelihood of this coming back down halfway, which is kind of the standard for most retracements based on this type of volume or this kind of this amount of increase. I mean, like that was an 80% from start to finish in the last 21 hours, right? So that being said, if we can see that, you can tell that there's a lot going on here, and that it's actually in pretty good shape if it hasn't come down that far, right? So let's look at smaller time frames, kind of see what we can identify here. And as we can see on the 4-hour chart, we are starting to see a retracement. It could actually just go sideways for a while. We'll find out here soon, of course, but generally speaking on the 4-hour chart, that's actually some pretty good price movement. Keep in mind though, this is not a good bull run. A lot of bull runs we like to see kind of a staircase pattern to get where we need to go. That way it kind of stays consistent and smooth. This is a strong shot upwards, and there's a good chance it could shoot back down. So that halfway point I was referring to earlier, that may not happen today, but it could very well likely happen in the next week. Okay. And we'll look at that here in a second. Let's actually kind of see if we can identify what that looks like. We can do, well, we'll just go ahead and use the Fibonacci retracement tool and kind of see where we're at here. So we got a pretty strong, we got a couple of support levels here. One is at about 49 cents approximately. Let's do that again. So 49 cents. And there could be a secondary one at about 52. Yeah, all in all, we'll just go ahead and stick with that one there. And what we want to look at too, we also want to look at some larger time frames here and kind of quickly identify, see if there's any other major points. That's pretty close right there. There's another resistance. Yeah, this one could be a good one too here. So let's go ahead and mark this guy here as well. Right about 60 cents or 60 and a half. That could be the next major support level. And the reason why is because it topped out there previously when it was trying to recover before the China candle. So if it does come back down, there's a chance it could come back down that far. Now looking at the MACD here, let's go ahead and see. pretty much had a convergence right around 9 a.m. on the 1st. So 3 days ago was kind of give us an indication that we had a long position, that we had good potential for a long position here. So a lot of times if you're kind of new to the channel, when it comes to taking a long position, right? Like just say, I mean like for duration. In other words, you're taking, it's a long time frame that you're holding it, right? Obviously you're going up in the sense that it's a long position, but when it's more so like a swing trade or a hodl trade, you want to look at the MACD and kind of get an indication of when there's a good buy signal. That's typically a good indication of a position to go long and to hold for, longer than just a short amount of time. So that being said, if we can see here, we can tell that there's definitely a lot going on here, but on September 1st, there was a strong indication of a buy signal here. So let's go ahead and mark that and see where that kind of translates on the 1-hour chart. But all in all, I mean, this really has no signs of slowing down. There's a good chance that it could, again, come back down here to the support level about 60 cents and bounce, which it actually already did here. We'll look at that in the 1-hour chart. You can kind of see that. But it's working itself into a channel between 60 and 70 cents. So I'd say the price is probably going to stay between 60 and 70 for a little while. If Bitcoin takes off and can close above 50,000, I think that's a good consideration for the fact that it could in turn increase. Because a lot of times, that's basically what's happening right now. A lot of altcoins are ready to take off. They are extremely, primed and like a lot of, ascending triangle patterns are forming. And they haven't broke out yet because Bitcoin is still stuck under 50,000. Yes, we've gone up to, 50,800, 50,500, but it comes back down at the end of every day to break even at 50,000. But once we get that 50,000 to break, I think we're going to see more of an open season for coins like Civic and a handful of others that are already taken off or planning to take off. Okay, so just something to be aware of. I think right now with Bitcoin kind of not quite sure if it wants to break 50,000 yet, there's kind of a bit of a slowing down period here. That could be influencing it right now. Now moving on to the 1-hour chart, let's go ahead and take a look at Ichimoku Cloud. As we can kind of see, obviously it's above the cloud, but take a look at this here. This is quite interesting. Right as I marked with the 4-hour chart for the MACD convergence, not 4 hours before then, we got the price to break above the cloud, and that basically tells us that we have a long buy signal. Okay, so as a swing trader, hodl trader, whatever the case is, if you're holding for more than 24 hours, this would be something you want to try to look for. When the price breaks above the cloud, it's considered a buy signal. When it's below the cloud, it's considered a sell signal. And essentially just one of those things that makes sure that you kind of have, direction, you're heading in the right direction, so to speak, right? So you try not to buy into the cloud. Like when the price is within the cloud, that's considered a no buy zone. But above is definitely a green light. And if you're going to short, you'd want to take a position below the cloud. So that being said, I mean, that has no bearing on where we're at right now. I just like to kind of teach that and show that there's a definite correlation between the 4-hour chart MACD and the 1-hour chart there. So if you're going to set some indicators and kind of get some alerts, those would be the two best things to do or to look for at any given time. Okay. Now let's go and take a look at TD sequential. Guaranteed we're going to be in extreme overtime here. Yeah, take a look at this here. So if you're new to the channel or TD sequential in general, it's time to mark sequential. So if you're going to search for it, just type in TD sequential into your indicators there. And what it does, it basically it counts up to 9 and then it stops counting. And the reason why is because it takes the candlestick, 4 candlesticks prior and sees if it's below or above. If it's below, it continues to count up. But once it hits 9, it basically tells us that, hey, we're reaching a state of exhaustion. All right. So we have this potential exhaustion here. And now take a look at this here. This is interesting. You can see right here, it got stopped out at 7, 8, and 9, right at the major resistance level that I just drew on the Fibonacci retracement, right? So that's a major resistance because of the fact that it got stopped out there. But more importantly, when the price continued upwards, there was likely a short squeeze that continued to push the price up further. So that's usually what we see happen here, because this first initial push is kind of like the kicking down the door, and then once the door is open, everything comes in. And that's essentially what happens. There are probably a lot of short positions that got squeezed out at about 49, 50 cents. And then, of course, the price just continues to push upwards. And then we see a kind of an increase in volume because of the fact that a lot of people like you and I are catching on, right? So as soon as it hits like that 10, 15% increase in the day, we start catching on, we start buying in. So we're like that second wave in most cases. That's why you got to be careful. Now that it's kind of peaked out, adding to your position right now could be very, very much a bad idea. I don't know how else to describe it. Be careful, wait for the price to come back down and maybe test the support level first and see how it continues. right? That's how I prefer it. I like to buy the dip on a major support level. And right now, 60 cents is appearing to be a pretty strong support. We'll see if it is tested again soon, but you can see it was tested once and rejected and pushed up to 70 and got rejected too. So I think it's going to stay between 60 and 70 cents for a little while. Okay, that's just kind of what we're looking at there. So again, TD sequential, extreme overtime right now. We really should have seen a retracement right here around 49 cents, but instead there was likely a short squeeze that pushed the price up even further. So now we are definitely overextended. So I would recommend not taking position right now. Yes, it might pump again up to about 72 cents, but if it does, it'll probably get rejected again based on that being the previous high, right? Because again, we looked here, all-time high for Civic is 72 cents. Okay, it has not broken that yet. Okay. So again, just something to be aware of. Try to think about that when you take an entry. Be careful, be cautious. Let's look at the 15, see if we have any entry points. It'll probably start, we probably lost EMA, which we did, yep. So here's the thing. EMA and VWAP on the 15-minute chart are probably the two best indicators you can use. At least they work very well for me personally as a trader, day trader. I've done swing trader for a long time too, and honestly in the last 15 years, VWAP and EMA on the 15-minute chart are the best, most effective things I can use. And the reason why is because VWAP is basically the volume at average price. It takes the volume the last 24 hours and express it as a price, and what that does, it works as a support level. So in this scenario here, we see it working as a support, and therefore it's basically, when the price is above, it's going to continue to reject. So if we do lose this support level here, right at about 61 cents, or sorry, 60 cents, we have the VWAP sneaking up to go ahead and continue to push the price up, right? Furthermore, we got the EMA line here, that's the exponential moving average. I use EMA 15, and this is essentially telling us that, hey, we're losing EMA, therefore there's a strong chance that the bears are going to start taking control and the price will come down. And what I mean by losing EMA is you can see in this bull run here, watch. See how the price stayed above EMA, lost a little bit, but bounced off support at 60 cents. Then it continues up. So now that the price is essentially getting rejected and coming down, there's a good chance we should see the price kind of average out here or possibly lose and reject down to the next closest support. Okay. Again, this is extremely overextended, 80% increase in under 24 hours. So you got to take that in consideration. The likelihood of that staying that high is extremely low. It rarely happens, especially when it's testing and rejecting off of a previous all-time high. That's an indication the price is not willing to go much further until it's continued to be tested and rejected multiple times over. Because the more often you test a support or resistance level, the more likely it is to break, right? But if it's a previous, all-time high, those are working as much stronger support levels. So the price could squeeze through 72 cents, likely. A lot of short positions were taken right up here. But again, you want to be careful. So in this scenario here, long story short, if you're going to plan to take entry, wait for the price to bounce off of 60 cents and stay above 60 cents for a while. And or if it loses 60 cents, wait for it to come down to about 49 cents and see what happens there. Because I believe it'll continue to stay in this channel here, just based off its momentum. I think it's probably likely going to try to test 72 cents again in the near future. I just know that this needs to calm down for a little while before it can, recover. And the reason why I know that too is, well, not only TD sequential telling us that we're in extreme exhaustion, right? We're basically like 24 hours into a bull run. It should last only like 8 to 10 hours. That is indicator number one. But indicator number two is the variation here. So the standard deviation from VWAP to the price action is probably really quite high. I'm guessing it's double digits. There we go, 22%, 21%. So from where the volume weighted average price is, in other words, the price at this point should have been 56 cents, and it was upwards of about 68, almost 70 cents. In fact, I didn't even go all the way to the top. 25% variance. So when you have anything over 10%, in other words, when the price is standard deviation is 10% or greater away from the volume weighted average price, that is essentially a case in point where the price has to come back down. Now, the thing about VWAP is it's got two standard deviation lines that reset every 24 hours at 5 p.m. Pacific Standard Time every single day of the week. It's built on a traditional trading cycle because 5 p.m. Pacific is essentially when the post-market hours close on a traditional trading day. This here, rolling, crypto's rolling, so it always resets that point. But what I'm getting at is the fact that this deviation being so high tells me that when we have that, that the price is so far out of whack from where it should be based on the last 24 hours of volume, it has to come back down. So when I see this line down so far down below, it makes me worried, and I usually rarely take entry unless it's obviously a strong bull run. It hasn't You know, if it's broke, just say we broke 72 cents, then you would maybe want to continue adding to your position. Right now, I'd recommend just being careful, see how the price responds to 60 cents, and then go from there, right? But my prediction here is that Civic will eventually break its all-time high. I think that's a likelihood, but I don't think it's going to happen right now because of the fact that it has to calm down. I mean, any good bull run is going to have a staircase pattern, okay? And this is not a staircase pattern. This is like a shoot to the moon pattern, and it's the likelihood of it coming back down, I feel, to about 50 cents is very likely. Okay, so if the price comes down and we lose 60 cents as a support level, watch out. It could very well keep nosediving down. Again, if Bitcoin surpasses 50,000 in the next couple of days, then I think Civic's going to stay right where it's at and continue to progress upwards, right? We're going to probably see like an ascending, triangle wedge pattern that's going to form, and it's going to probably eventually break it. But for right now, it's very, very premature to kind of estimate anything other than the fact that we're going to see some sideways action, some retracement. And again, if Bitcoin goes on a tear in the next week and hits 60,000, then Civic will take off right away. However, we're not there yet. Bitcoin is taking its sweet time, kind of just trending around 50,000 right now, plus or minus. So I don't have a lot of confidence in this taking off again in the near future. So protect your investment, move your stop loss up, right? If you were in the profit and you took an entry down here in around 18 to 40 cents, take some profit, maybe trim 50% of your position, wait for it to come down, bounce off the support, and add to your position. Or just in general, keep your whole position open, but move your stop loss up to 60 cents. Heaven forbid it comes down and you get stopped out. That's okay. You still took probably a 10, 20, 30% profit, right? Take your money while you still can. Don't get greedy. Don't be a diamond hand holder that they call it and just get so stupid that you're going to hold on forever. I know it sounds crazy because I'm sure there's cases in point where you sell too early and it sucks, but it sucks a lot less than having so much profit and losing all those gains. I don't know. To me, I personally like to take profits when I can. I'll admit I do lose out on some opportunities, but I'm constantly profitable. Okay, so I don't know. Depends on how you look at it. I prefer my 80% success rate. Okay. Speaking of 80% success rate, be sure to check out my Patreon account. I actually provide my trades to my community members, and I provide basically signal trading throughout the week. So every trade that I take, I provide to you, along with best practice. And more importantly, we actually have swing trades and hodl trades now too. So it's kind of nice. It's not just a day trader's tool. I've got a lot of good groups of folks in there actually having great benefit, and it's been really good over the last couple months. So again, check that out in your own time. But everything you just learned here today, I use in that trading style to keep my percentage high, right? So it might be conservative trading. If you're more of a risky trader, you may not like it, but I like to be safe and calculated and be careful and always take my profits. So, comment below if you're different in that sense. It's perfectly fine. We all have our own trading styles. But again, check that out obviously too as well if you're considering it, or maybe you just need a leg up in the industry right now, because it definitely helps to have extra eyes in this industry, because man, we're so busy nowadays. It's so tough to be able to look at this all the time, and thankfully I have the privilege to be able to look at this every single day. All right, so again, enough about that, enough rambling. I hope you found benefit here. If so, like and subscribe. If not, that's okay too. Thank you so much for your time. I look forward to seeing you in the next video. Have a great rest of your day.